So today we used one contract and we were able to clear basically a band on both of them. And they weren't even our A plus setups. It's just the market's moving in a direction. We can see that it's moving in a direction. And we have the technicals that are displayed on the screen that allow us to hold it properly to get to the numbers that we're looking for, those price targets. So if we can't hold that, otherwise, if we do hold above, then we'll put a fast trend line on and we'll make new highs and likely target the new high, which would be above 20,230. Market opens in 3 minutes and we're slowly creeping to mid trend point. So I think we're just like inching through the order block. So market open might actually pop straight up to 20,166. Nice, pretty hard news. Did it just open? Or is it like trying to open? Hey, 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 hey. Bands on bands on bands. Let me get that. Cheers. All right. Damn, boy. All right, we at the 78. Now we can get busy. Sorry about that, guys. Had to take my own personal trade there for a moment. Didn't want to put the rest of the world at risk. It'd be cool if we can get like a 188 entry, but I don't know if we get a chance. If we can buy under it and watch it hold on top, that'd be cool. But technically at the 78 level, we're supposed to get way deeper discounts, but we've already been here a few times, so it looks pretty bullish to me. So we got that 189 entry. It wasn't 188, but 189. Moving off. Nice. And I'm on a roll right now. The 78 level is at the 20,188. So if we get candles closing under there, then sentiment switches to bearish. As long as all these candles hold, can stay relatively bullish. This fast trend line, we'd like to keep it intact. So obviously, if we get a sharp close down, then we lose momentum. Should probably reassess. What's that, huh? And apparently, there's news at 9:45. So there's a good chance market doesn't do anything but inch until that happens, and then it might break away from the spot. But fast trend line is broken technically. So wherever this candle finishes, the bottom of that will be the stop loss. And then we would need it to recover. If it doesn't recover, then we want to get out and just reassess a better entry. Just one contract, but we don't really have like a model to be playing off of right now. So stop loss under the candle. Now that it finished, it's the first candle to break the fast trend line. So ideally, if this wanted to correct, it will use this momentum, get back above, and actually like break away. Otherwise, we're just stuck in a range. So it'll hit the top, come back, hit the bottom, stop us out, hit the top, and keep playing in that perspective. So do what you will with that information. So it's tried correcting twice now. If this candle does not close higher and it ends up having another wick here, then you could probably start thinking about the downside. Hey, we got a nice high close. And it looks like we're recovering the trend line there. Perfection. And we're up about 700 on contract. It's pretty good. Now there's a structure level here. So if it needs to come back down, it's going to have to touch this. So if you're not interested in losing more than half of your investment at the moment, just secure the profits and take the next trade. Because if it can't hold the fast trend for long enough, then you'll get that first down. Try to base here. Okay. All right, 15-minute is above. Oh shit, we're outside of our area. 20,240 was the high price target. So if we can get through that, amazing. But if we end up falling short of it, then we can fall back into this trend. But so far, everything looks pretty solid. I'm not really singing like. If I would have kept that shit from the open, bro, the amount of money I would have made. Can't live like that, though. You know what I'm saying? Gotta live into the future. Let's add a 1 deviation to 1.5. Really seeing though. As far as 1.5. Damn. So starting at 257. I don't know what he said there. I'm gonna have to look it up. Niggas who perish and they going gorillas. You know what that means? I don't know what it means. So I can. It was going. This isn't like, again, a high probability setup, but we can take the fast trend line trying to see if it runs. If it fails the line, then obviously we should get out of the trade. Probably doesn't have enough momentum. But there's basically a little, imagine this candle body here, because this is what like created a little sweep. So imagine that as like a base. So it can use all of this area to keep trying to go up. If it goes below, you don't want to be in it. If we put this a little tighter, you might get a better reference point. But that might look a little wild on like a 1 minute chart. Yeah, it looks wild. So it's a bit too aggressive. That's okay. I guess we'll touch it. So again, why are we thinking about doing this? We only reach parabolic trends after the 78% level is claimed. So you can see here, we created a string at the market open, 78 level was claimed, went back under it, did not use the opportunity to go for lower discounts. So we are going to push into higher premiums. So when we talk about higher premiums, those are the deviations of the Fibonacci. A deviation is each one of these increments, right? So you can see these little boxes here. This is one deviation, the 23% to the 30s. You got the 30s to the 50s, the 50s to the 60s, the 60s to the 70s, and then we have the 70s to the 1. So now when plays go parabolic, notice how these deviations down here are very small, and then the 70 to the 100 is about 30% difference. So now the deviations expand. So now you can see here, we're breaking out of the 1, so we get 30% deviation increments. So this is going to be a clean run for 30%. Then we'll experience more consolidation, and then you'll get another 30% deviation run until you get to that 1.5 that will be up here. Ideally, if something is breaking out, then it will move in that perspective. And this is all mathematical based off of looking at this shit for a long time. But I've been slowly dropping these things in there so that way you guys can understand it. Because if I introduced it this way, you'd be like, what the hell are you talking about? But you should be able to wrap your head around this perspective that we are moving at a faster rate because we are breaking prices, right? We're breaking premiums. So we already know that the sellers or the buyers, they like this price. And they can see this commodity increase in value. So this is the algorithm computing that. So before it could only compute it at small deviations. And now that it's in a bigger space, it goes from 1 to 1.5. So it's just a bigger deviation for it to continue running for. So all I took was the deviation from the 70 to the 1. And that just gives me a visual representation of how much space that is. And it can move in those increments to cover this ground. So technically we've already hit price target 1, standard deviation. And then if we keep this one, then we can move to the second. If that doesn't make sense, that is okay. You don't need to know this in order to be successful in the strategies or trading, but this is good when you're entering a space that has no levels for you to use, because at least you know where the market will experience rejections or how to articulate price to know if like it's going to continue running higher or pushing lower. So right now we can see the fast trend line's already broken. So technically it's struggling getting past that first deviation here. You can see that deviation level. That's obvious and taking place. So if it keeps failing that deviation level, then it could go back to that 78, which would be back into this space. Level inside of this deviation here, you can see the midpoint holding, and then we're above here. Technically, we're actually above the fast trend line again. So if we want to create a correction, this would need to break very fast back to the next deviation, which would be 20,282. And then if we get to that, we'll be above the trend again, and then we'll be able to see some runs to that third deviation. And then after that, like, bro, um, I can't tell you where it's going anymore. It either just runs all fucking day, unfathomably. And you can keep rinsing and repeating this process, but you'd be building this shit like Legos. Does this make sense, or just too complicated, or just unnecessary for your So would you expect it to retest a deviation before breaking, or based on volatility and respecting the short time frame trend? Yeah, exactly. That's exactly how you want to think about it. So don't think about the deviation as a level that is required to respect. It's more about understanding what volatility looks like. So the faster it pushes through a deviation, shows that the volatility is strong and it might need to get somewhere, right? So as we can see here, it spent a few candles in this deviation, but this next one, 2 candles is taking us straight there. And then if we push through that, it might just do 1 candle in the last deviation, but that's where it'll spend most of its time once it gets there. So it just gives you that perspective of saying, maybe I should get out of this trade because it has a chance to reverse on me, or this is something that is aiming towards something in specifics. So look how fast it pushed through this last deviation versus how much time it spent in the first. It's just a measurement of volatility. It's not like something you want to take levels for. So that'll be, I'm sorry. And what I mean by take levels, I mean like don't use the deviations inside of the deviations as levels that should be respected, because the Fibonacci is the levels that should be respected, not those smaller deviations. But yeah, banger trade again. So there's a fucking another band with contract. 800 bones. But pretty good. Oh, does that answer your question, bro? Does it like fit properly? I'm gonna get out here. You don't have to. Honestly, this could run all day, but that's the 3 deviations that are required for me on the volatility spectrum. So I believe we will spend a lot of time in these deviations before taking another run. I've been following the rule of it. If it's 2 candles on the 1 minute close outside the trend, to just judge if the volatility has been slowing. Oh yeah, for sure. I think that's a very great way to measure it. Sometimes I would say like maybe 70%. Sorry, not the 70%, the last half. So the 30% of the time, you might get that 1 minute candle that closes too deep, and it's like fuck, like can't even wait for 2 candles. But oftentimes that doesn't happen, and it's a good rule of thumb to use. But yeah, deviations are really cool, and they work in so many intricate ways. So you have to use it in a way that serves you. So I really didn't care for fucking math class that much, but visually, if you can make this make sense, it's just too easy. So, for example, here's a run that went straight with no pullbacks until we got to this point. Big candle drop, and then it spent time here. So technically, that is 1 run. So that is 1 deviation. So if you clone this deviation, the market algorithm will distribute 3 of these on a volatile day or a trending day. I love using this in the Tokyo session. I'd probably show you guys how I used it today actually, because it helped a lot. But here's 1 deviation, and then I just added 1 onto it, and you can see how this midline is respecting, and it's a trending day. So if we were to, eventually we're going to get a low somewhere. Wherever we get that low, we can put the fucking trend line down, and then it'll look something like this. And then you'll see the deviations and how it works. And then you'll be able to take the boxes, times it by 3, because usually the market will move in 3 deviations, and then it'll give you a new like set of data to use. But this explanation isn't for you to just go and like only use this as a strategy, but This is the inner workings of every strategy that we know, right? So all the time we're always talking about like, yo, put a level at the high here, and like that's your price target. But the reason there's a high there in the first place is because there's a deviation that the market is coming from. So if you look at this, here's a string, that's a deviation. Times it by 3, it'll probably be this high. So we'll clone it and then clone it again. 3 deviations. So that's the first string that started it. And these are the rest that straight up distributed the deviations. So that's what Fibonacci is. So that's how like the inner workings of the Fibonacci was designed. It's literally just deviations stacking on each other. So if you look at the Fibonacci just as it is, we open that up, you'll see the percentages. It goes from 0 to 0.236 for a reason. It's not 236 just because we wanted to be fancy. That is genuinely the Fibonacci equation that was found out in like fucking history, bro. You know what I mean? Philosophers from way back in the 1800s had this shit. So when we see this 236, 0.36, 0.5, 0.618, these deviations are expanded respectively because if you know how the Fibonacci works, it starts with 2 symmetrical numbers and then it can expand from there. So 1 and 1 equal 2, and then 2 and 1 equals 3, and then 3 and 2 equals 5. And then it just keeps expanding. So eventually it goes from being very symmetrical into being very odd. So the space increases the further something moves in one direction. That is huge if you caught that, right? So the further it moves in one direction, the deviations just get bigger because of the way the Fibonacci equation works. So you can see small deviations and then it just gets bigger and bigger. So look at this run, right? All of this is very small, straight gap, a lot of action here. And then this deviation straight to the 1.5. And then this 1.5 gets bigger. That shit goes to fucking 3. You gotta change that to red. So then that deviation expands by double, right? Because 1.5 plus the previous 1. Oh, so that's 2.5. So technically the next deviation is 2.5. So it's a lot bigger than the 1.5. So this is where parabolic, right? If this keeps running, it'll just grind all the way up to 2.5 and so on. And these are the days that fuck up most YouTube traders because they're looking for some kind of flag or symmetrical triangle or head and shoulder when the market's just trying to get somewhere, you know? So as the algorithm computes itself, then on the higher time frame, you might get those kinds of shapes where you'll see the head and shoulders or the inverse head and shoulders or whatever the recoveries are. So that's the mathematical workings of it. But obviously there's still a lot of economics and things like that in place. But the goal is just to find the most advantageous trade and make some bread. So today we used one contract and we were able to clear basically a band on both of them. And they weren't even our A plus setups. It's just the market's moving in a direction. We can see that it's moving in a direction. And we have the technicals that are displayed on the screen that allow us to hold it properly to get to the numbers that we're looking for, those price targets. So I hope that makes sense and adds some value. Every single day we get on here, especially for the last past fucking, I don't even know how many Zooms. We just been slapping shit. And then all the calls in the chat too. Like we barely lose anymore, bro. So with that, adding to the technicals and all the things we have in the courses and stuff like that, we're moving diligently. But in the manner of execution, I understand that there's still a way to fuck this up. And it's not necessarily because you don't truly understand, but it could just be the execution of it, right? Sometimes you're just not as confident or whatever psychological deficiency you lead yourself to. But the practice, bro, the practice and seeing the implementation just adds to it and should be motivating more than it should be frustrating, because eventually at least you understand that it can be understood. I think that was the biggest thing that was in my journey, that kept me going, was the fact that someone figured this shit out and they made it happen for themselves. So there's no reason why I couldn't. So if I didn't have that instilled in my brain, then I probably would have gave up a long time ago, because this shit can be very confusing, even to me on a random day if I just wake up wrong, you know?